Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, markets didn't do much as investors waited for the beginning of the earnings season as well as for the upcoming Fed meeting. On Tuesday, volatility began with some weak earnings reports from major corporations, including Microsoft, Caterpillar, and Proctor Gamble, as well as a durable goods orders report for December that was unexpectedly down 3.4%. Consumer confidence for January came in at 102.9, the best since August of 2007, and new home sales for December surged 11.6%, blowing past analysts' expectations, but that good news was largely ignored, with the Dow Industrials declining 291 points by the end of the day. On Wednesday, the downward spiral continued with the Dow closing down another 195 points. However, the Federal Reserve concluded its meeting and didn't make any changes to policy, citing continuing improvement in economic conditions and labor market conditions. Thursday, things improved after jobless claims for the week ending January 24th showed a dramatic drop, down 43,000 to 265,000. Crude oil stabilized and increased slightly, and markets responded with a nice rally, with the Dow Industrials closing up 225 points. On Friday, the fourth quarter GDP was released and it was up 2.6%, lower than economists' 3.2% estimate. Markets were down sharply on the news. Now let's take a look at some stocks. Apple shares soared on Wednesday after Apple's first quarter earnings broke the record for the largest quarterly profit in history by a public company after showing the company made an impressive $18 billion in net income. Driving this was heightened demand for their new iPhones, with the company selling a record 74.5 million units during the last 3 months of 2014. Yahoo caught investors' attention this week after the company announced plans to spin off their stake in Alibaba into a separate publicly traded company called SpinCo. By creating a separate entity with Yahoo's remaining 384 million shares of Alibaba, Yahoo will be bypassing a large tax bill. The spin-off is forecasted to be completed by the upcoming fourth quarter. Alibaba Group Holding Limited shares were down as much as 9% on Thursday after the e-commerce giant reported revenues of $4.2 billion, an enormous increase of 40% year over year, but still fell short of analyst forecasts of $4.45 billion. At the same time, Alibaba is also facing pressure from regulators alleging that the e-commerce company hurts consumers by allowing the sales of counterfeit products on their platform. Facebook, for the seventh straight quarter, reported earnings that beat analyst forecasts. Ad revenue increased by 53% to $3.6 billion, while mobile ad revenues increased 100% year over year. Mobile ad revenue now represents 69% of Facebook's total revenue. The stock remained relatively flat with the news, gaining just over 2%. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.